All right, guys, it's Big Mike, and like always, I'd like to thank you for being here today. Today we've got Matt Davio, and he's going to talk about why traders fail and how to overcome. So Matt has been trading for about 20 years. He trades futures, commodities, currencies, and stocks. He's run his own hedge fund. He's worked for some prop shops. Many of you might know him from his Twitter name, MissTrade. He also has a website where he interviews hundreds of traders, very well-known traders, and some really absolutely fantastic interviews. Definitely need to check those out. You can go to his website to see those. And I approached Matt and said, look, I think that you're in a really unique position to talk to members of the group here about why traders fail. You know, what are some of the commonalities between the traders that fail? And then as such, that's going to tell us some of the common things of traders that succeed. And he put together a presentation, and briefly the topics are making trading too complicated, having no plan and no rules, as well as no patience, not enough physical or emotional capital, and failure to take responsibility or to do the homework. And we're going to dive in with each of those things, and there's going to be a good Q&A at the end of the webinar as well. So I'm really looking forward to it. Really very happy to have Matt here today. I think it's going to be an excellent presentation. All right, so before we get started, just a few things as always. Questions, if you have questions, type them into the box. And Matt has said that the presentation is pretty brief, so we'll try to hold the questions till the end, and we'll do the Q&A at the end of the presentation. The webinar is always recorded, and I'll post the recording on BMT sometime tomorrow. I will also send a link to Matt so he can send it out to Twitter or to his guys. So the recording will be up sometime tomorrow. All right, guys, give me 1 second, and I will be turning things over to Matt.
Okay. All right, Mike. Thanks a lot for reaching out. I did want to. Mike suggested a couple topics, and I wanted to really, instead of talking about all upside, trading is to me, it's all about managing your risk and managing within the game, and it is a game. And usually, the player that you're playing against is not yourself, or rather, is yourself versus one participant or a multiple of participants. So, I really want to focus on that. And Mike, thank you for having me on. Again, I have been trading for over 20 years. I would say I have had a little different background that I'll get into a little bit, but the main focus on this presentation is this is probably something everybody goes through as far as learning curves. You've got to shorten it and get to a place where I always tell people, if you're scratching money for a year, making a little bit of money, you're probably going to be successful in this business if you can do that for a year or two early on. If you start making money right away and you're really consistent, you may be one of the fortunate few who can do it without so much as a flat learning curve. But most people, I would say, go through some progression to get to be a more consistent and more profitable trader. So that's really what the presentation is going to be about, and I look forward to speaking with you all and showing it. Let's see here. There we go. Hopefully that didn't go too. All right, so who am I? I've been living in Bend, Oregon for about 12 years. I moved out here from Detroit. The reason I moved out here was I was working for a hedge fund that was based on the West Coast. My partner was in Chicago. I was in Detroit. We wanted to be on the West Coast for favorable trading hours, so we moved out here. At the time, I had 2 kids. I've been married 19 years. I now have 4 children. 2 of them were born here in Bend. And it's been a great move for our family. The one thing I would say about trading is that if successful, it really does allow for freedom in a lifestyle that really works for our family. Especially out here on the West Coast, my hours are very favorable, in my opinion, really from about 6 a.m. until about 2 p.m. is when I'm focused on the markets. I don't trade a lot after hours. I don't trade a lot in the off hours. I prefer real trading hours if I am day trading, and even if I'm swing trading. Most of my trades happen during regular market hours. So I ran a hedge fund for 3 years after working for a couple different hedge funds, both Peak 6 and Parallax. Peak 6 is still in existence out of Chicago. And I'm also involved in a couple startup opportunities here, local ventures here in Bend, in the wireless space that has nothing to do with trading. I bring that up only to say that one thing about trading that I really believe in is that if you make it everything for you, there's a slippage problem there, because different markets move at different times, and some markets are either trending up, trending down, or non-trending really are the opportunities that are out there. So having outside ventures is really important, whether it's hobbies, whether it's fishing, golf, hiking, biking. These are all things that I love to do outside of other businesses, and I really think it's important that you diversify your efforts when you look at trading. Trading for most probably won't be your only way of driving income, but I do think there's a place for it in everybody's portfolio, and that is generating alpha while really maintaining and managing the risk. If you manage the risk, everything will take care of itself. So let's get to the meat of this presentation. So this is pretty typical. What I see a lot, most people will go through, how long have you been trading? And whether it's 6 months, 3 months, 2 years, 3 years, a lot of people usually when they start will look like this. This is their typical curve. And it's not the way you want to go. You want to have this obviously mirrored and going the other way. So why is it that people get to this type of P&L situation when they are trading? Probably the number one reason is quite simple, and I've made these pretty simple because I don't think trading, I like to think that whether it's CNBC, Wall Street as a business, they want to make this business much more complicated than it needs to be. So whether you're managing your own 401k, your own pension, or actively trading different time frames, it really comes down to this basic starting premise, which is if you don't have a plan or rules for getting into the game, and it is a game, and it's a game that can very quickly turn you around, you won't succeed. So the other thing that you need to figure out is what type of game or what type of style do you want to play. And if you're not aware of these things from the get-go, it's going to make it very difficult. So this is really the foundation, if you will, of getting into this business is you must have a plan, you must figure out that plan, and you must figure out how to follow that plan in execution. So execution is important. Knowing, there's a lot of people that know how to create a plan but then are afraid to trade or trade too much, and we're going to get into some of those issues as we move on. The number two thing, and again, trading shouldn't be complicated. You hear a lot of people talking complicated option strategies, and they may be complicated, but generally for those people involved, it's simple for them. So what I see people, again, typically doing is finding something that's either doesn't fit their personality, they have too many indicators, too many time frames, and too many asset classes that they're following. Again, I come from a world where I traded stocks and managed a portfolio, and that took a lot more of my time. In my life today, I really pretty much trade 99% of my time is traded in primarily the futures markets, whether it's financials, and the strategies that I use, whether I'm trading the ES or corn or wheat, all end up being the same for me. So you really have to get to a point, I believe, where you simplify it and make it work for you. And what I do may be completely opposite with what most other people do, but the bottom line is you have to find something that works for you. So turn off the noise, turn off the indicators, turn off multiple time frames unless you're trading one or two vehicles, which I think having multiple time frames is helpful. But don't confuse a day trade with a swing trade is really what I mean by that. The other thing is, you really have to simplify the noise, and that means turning off news, turning off Twitter when you're trading, and finding the right times and the right spots and the right places for your methodology. Patience. This is key. Again, this is one of the key premises when it comes to trading. If you don't have patience when it comes to this game, you will not be successful. I always say there will be another trade, and if you miss the one that's on the table, it's not a big deal. That's really how I came up with the name MissTrade, knowing that two factors with that name. I wanted to trade more like a woman, quite frankly, because there aren't a lot of traders. And Mike, I heard you say this before we came on. There aren't a lot of female traders in this business. However, one of my best mentors was a female trader, and really what I learned from her is that patience piece and that lack of ego piece. You really have to separate yourself from opinion and to trading your plan, you are going to be wrong continuously in this business. And if you're one that can't allow yourself to be wrong, you're going to have a very difficult time changing that initial P&L structure that we showed on that first slide. If you're revenge trading, if you're trading to get even, these are just things that are going to drive you crazy. You're going to end up earning way less. You're going to give back some of the profits, or you're going to lose big by trying to do these types of things. So you really have to sit on your hands and really be patient and know when the right times are to trade and to not trade. These are really, really key points, I think, to anybody. Patience is key to this game. When it comes to physical and mental capital, this is number 4. I see this all the time. I see people with a $10,000 account that think they can take it to $100,000 in 3 months. I would say that's possible, and there are many that can do that. Is it sustainable? Probably not. You're not going to go tenfold on an account over and over again. So what I would say to you is make sure you have enough capital. You need to stay alive. If it's only $10,000, you're really going to have to pick your spots and be even more selective in what you trade and how you trade it. This isn't a get-rich-quick game. And again, I continue to emphasize the game, but it's about maintaining your capital presence and growing it, hopefully with the right type of strategy. Most can't handle the ups and downs. This is point 3 on this because of the fact that they're they're undercapitalized and they're trading the wrong way, and or a lot of times physically. What I mean by physical capital is, are you in condition both physically and psychologically to play this game? It's a tough game, and every day I think you've got to get out there, whatever your thing is, that you've got to get away from the screens. I try to do it during my trading day. I find a point in the day where it works for me and for my trading and for my family, but I do highly suggest that everybody gets out there and makes the physical as well as the psychological strong components in your gamesmanship when it comes to trading. Responsibility. I say this to my kids all the time. You're going to get beat. You're going to get beat just like Michael Jordan does. By somebody on the floor. You're going to get beat by somebody taking it to you on the court, and the same thing will happen in trading. You've got to look. Again, I come back to who is at fault. Let it go. Move on. Accept responsibility. Is the person in the mirror. That's yourself. It's not high-frequency trading. It's not the guy that's long when you're short. It's not the guy that's short when you're long. It's not CNBC. It's your situation. So find out how to deal with that psychological piece, and you'll have an edge to begin with. You have to learn to take responsibility. Losses are a big part of this game, and if you can't do that, you're not going to succeed. Again, I always tell people it's really true. In baseball, 300% is a Hall of Fame hitter. In trading, you really don't need to be more than 50. I've even seen traders who are 40% consistently make money as far as being right or wrong. So it's not about being right or wrong. It really comes back to the core of your risk. How much risk are you taking for the possible reward? And you really have to. The only thing that you can manage is your risk portfolio. If you can do that, take control of that, the rewards will take care of themselves. So number 6, not doing your homework. And by not doing your homework, this doesn't have to be complicated, but there should be a routine and some type of structure to your day. Looking at charts before the market, during the market, after the market, replaying what goes on maybe in the day before, using some type of journal is totally key. Especially for people who've never done this, you really need to lay out what was I thinking when I took that trade. Did the trade play out how I thought? Did I execute on my stop loss? Did I execute on my profit seeking piece of that? And this is really key. By doing this, by getting into this repetition, even though you've been in this game long enough, you'll start to see patterns and understand what the market will do, even without having a specific mechanics piece. Just by doing this, you'll come to know intimately what your strengths and your weaknesses are. So this is really important. I still do this every day. Most traders have some type of pre-game, post-game, and intra-game strategy that they're doing. So homework to me is not just at the end of the day or the beginning of the day. It's really an ongoing process. And quite frankly, markets are always dynamic and always changing. and I do shift. I tend to look at markets that are in expansion moves. That can mean going down big, it can mean going up big. But typically I like to play in asset classes that are moving pretty widely. So that's something that I know that works for me, and by having done my homework, this becomes crucial. And number 7, trying to figure it out on your own. Easier said than done. Obviously there are educators out there. I take people, usually I'll take about one student at max a month that will come out and trade with me for a week. I work for some people. I may not work for everybody. And what I try to teach is the way I look at markets, the way I think that most people should look at them, and then how you employ it really depends on your personality. So you really have to cut that learning curve, just as you do when you're learning to be a surgeon. There's a reason why they go through rounds. There's a reason why they go through different staminas in the business before they actually cut into real patients. And they do that on the arm and on the backing and the knowledge of other surgeons. So it's a slow process. I would also encourage you that it's not one that happens overnight. And you really need to be able to find an educator or a site that you can relate to, and don't use a ton of them. Again, when you start clouding yourself in multiple styles and drifts, you'll become confused. And I think I try to touch on all different time frames the way I look to trade. I will start from a top-down, what's going on fundamentally, but then I look at charts. But when it comes down to it, for me, it all comes down to time, price, and opportunity. So it's not just price for me. I hear people all the time on Twitter saying, "Hey, all you need to do is look at the price." That's part of the equation. There's a big time element that needs to come into your trading, in my opinion, and the way I look at markets. So that's something that I go over in my education with my students. So how do you get past these common mistakes? Again, I think you need to first off identify what type of person you are, what type of markets fit your lifestyle, and what do you want to trade. A lot of people like trading the European markets and being up overnight. Maybe they work a day job that allows them no time. Listen, there's nothing wrong with trading these markets that I don't trade. I just personally don't. It doesn't fit into my lifestyle. So I don't look to trade overnight. I'm not trading the Asian Open here in 2 hours. I'm not interested in the European Open in 10 hours, but it may work for you. Find out what works for you and for your family, and go to it. When it comes to style, there's really 3 types of trades, in my opinion. That these are the basis, and then everything around them can be more can be put to work, and that's trend following, counter trend, and then momentum traders. I tend to be more of a counter trend trader myself, and trend following would be second. Momentum is last on my list, but I'm not a day trader, so it's very difficult, I think, to momentum trade longer term charts, unless again your capital is much longer, and that may work for you. Simplify your charts. Find out what it takes. Again, if you saw my charts, I use simple bar charts with nothing but volume on them, and price, and time. And then I also use market profile charts, which you can do a search on, and the market profile is really something that you see here on the left of the screen. Just on, that's a balanced looking market profile. And so I use time, price, and market profile is primarily the tools that I use, and that's all I need. And I could trade beanie babies, and I could trade beans, and I could trade the spoos with this type of strategy. The detailed plan really means, when do I want to be in the market? When do I want to be out of the market? When do I want to be, maybe on the sideline? There are definitely times as a trader, let's say you have 225 trading days a year. I don't want to trade around the holidays. I don't want to trade around anything that may be going on, families, funerals, weddings. I take a lot of days off knowing that there's better times for me to trade. I typically find Tuesdays through Thursdays to be my most opportune moments to be in the markets. Friday afternoons and Monday mornings really get thrown out in general for me. The days before and after major holidays, whether it's Easter, Christmas, the summer holidays, Memorial and Labor Day, you end up really taking almost weeks off there, just because it's filled with lack of transparency and lack of fluidity and liquidity in markets. So that's when I choose to play and take off those times. and make sure that you journal your experiences and reread everything that you're doing regularly. So that's basically it. If you have any questions, Mike, I'm going to just throw this out there and we can throw the questions. And like I said,
Sure.
I wanted to keep it short because I really do believe that trading shouldn't be complicated. And I think a lot of people overcomplicate what they try to do. If you want to reach me, you can email me. I'm on Twitter at MissTrade also. I didn't put that on here, and I've got a couple different websites that you're, as Mike mentioned, I've done a number of interviews over the years, and I try to learn all the time. I by no means know, no more than 10% of what I've been able to learn is from other people. So most of it I do learn from other people rather versus on my own. So I would just encourage you to study as much as you can. It's an ongoing process, and manage that risk. That's the biggest piece. If you can take care of managing your risk, the rewards will take care of themselves.
Right.
So I'll open it up to some questions.
Well, thank you very much, Matt. And Matt can attest, I did not see this PowerPoint prior to just now. And for any of you guys that know me pretty well, you would think that maybe I wrote this PowerPoint. So I'm very happy to see that there's a lot of common ground that Matt and I share as far as philosophies. I made some notes as we go, so I'm going to start asking questions. And then if you guys have questions, go ahead and start typing them. So, Matt, let me ask you briefly. You said that you use a market profile. Are you looking at daily charts for the profile, or what are you charting?
Yeah, so I use a basic, depending on, it really doesn't matter whether I'm looking at the SPOOs or Apple as an individual stock. I will use the profile on multiple time frames. Matter of fact, typically what I'll do is I'll break it down, and I've got 9 time frames. I go from the monthly to the weekly to the daily, 240, 60, 30, 15, 5, and 1.
Okay.
I'll overlay the profile. And then intraday, while I'm trading, I will look at just the open market hours, and I will also look at the extended hours. So it really breaks down, Mike.
So you're looking at. So you're looking, the TPO charts are giving, I use profile as well, and I'm just asking to see if we're on common ground here. So it's giving you context. You're wanting to see if we're open, in or out of yesterday's value. I mean, what are you looking at for keys? You said you're mainly counter trend. So are you looking to fade the value area extremes? Are you looking to fade, Yeah,
I like the big extensive moves. We've been seeing them. I would tell you the last 3 months, really going back August, September, October, for my prime trading vehicle is the SPOOs, has been very slow for me. I've made most of my trades in the last 3 months, however, in the grains, probably 6 months. And that's because the grains are moving wildly.
Right.
I'm not a farmer. I don't know anything about farming. But one thing I love about the grain markets, when they're liquid and when we have action like we do now,
right,
they move wide, and they trend very well. And they work for both day traders and swing traders very nicely. So it really depends. And oil, for me, is always kind of in the flow. And the way that I look at the markets is oil opens first on the U.S. markets, then the SPOOs, then the grains. And that's the way I set up my day, Mike. So I will look at those in successive time, and I know where my areas of interest are based on the TPO. You're absolutely right. I mean, it really. I'm not so much a day trader as I am. Most of my trades take place within a day to 2 weeks. That's my time horizon. So,
and I want to talk to you about that right there, actually, because so I've been trading about 15 years or so, and when I started, it was all swing trades, and then somewhere around 4 or 5 years ago, I got this crazy idea to start trading futures, and somehow I kind of like morphed into this scalper. And I almost literally like woke up one day and went, what am I doing? Because this is so much harder than it was when I was swing trading. And for the last like 18 months, maybe even longer, I can't remember exactly, but for quite a while now, I have been getting rid of these scalps because it's just so much work. And I'm going back to bigger charts and bigger trades. I want to ask, how do you feel about that? Do you feel that a lot of people are trying to scalp to minimize risk, and it really is just like spinning their wheels?
Yes. So let me go back 15 years. That puts you to, let's say, 97, 98, and you and I have similar experiences. I mean, the early 90s when I first started trading was similar to 03 through 06, and I would say today when you're looking at the SPOOs, and I'll always use the SPOOs as reference. I used to trade in the early 90s. I traded a lot of OEX and SPX, and we were wide then, and then from 95 to 98 we just went into compression, and there was no volatility, no movement. Then you had the Web 1.0 where stocks went crazy, late 90s to 2002. That's where you were swing trading, I would guess, and that's what you were trading, and that's where you were successful with. I'm throwing this out there.
Yeah.
I don't know,
right.
but that's a similar pattern. And then what happened from let's call it 03 through 06? Again, you went through another period of compression, and stocks were almost impossible to day trade, or excuse me, impossible to swing trade. So you had to look at day trading, and I think that's typical. I went through a similar progression, Mike, where maybe because things were moving so wide in a day, I became more of a, as you said, day trader. But I really prefer the longer time frames because it fits my personality.
Right.
I don't like to be wrong, and I know that about myself. So I like to trade less. So in other words, I think if you're going to be a scalper, the best scalpers are really those that can do, if you could do 100 trades a day and be right 52, then scalping may work for you. It'll never work for me because I can't take that mental shrapnel that gets lodged into my brain by losing that much. Even though it's, I could lose 52 out of 100 over a longer periods of time and make money, but to do that every day, I don't have the stamina. Right. And so I know that about myself, Mike.
For me, it's the back and forth.
I need to be more selective.
Right. For me, it's the back and forth. That's what I can't handle. The long and then short and then long and then short. First of all, you can really get your ass handed to you. I mean, I don't know how else to say it. You can get tore up really fast when you're doing that. And I see a lot of scalpers do that. And I understand because, markets go up and they go down, but you're trying to catch every top and every bottom. And it literally makes me a little nervous just looking at some of these charts that I see guys posting on the forum because they're such tiny, small time frames. And, I understand that they're trying to trade it with like a 4-tick stop or something. I just can't, it just doesn't make sense to me anymore. And nor does me, because what happens is not only is it, like I said, the mental shrapnel, but you have to take it. I mean, for it to be successful, you have to trade all 100 opportunities in a day. And for the same reason you said, I can't take that. I mean, my brain can't accept that many trades, because there's going to be a lot of losers. I mean, it's a pure numbers game, and when you're flipping like that, both sides directionally, it's too much for me. Quite honestly, I'd rather wait for extensions in the market and sell out of the money calls when it would run up, and sell out of the money puts, and then trade around a spoof position in between there. When I'm, way when I'm wrong, I'm still getting paid. So, that tends to work for me because usually I'm right. I might be a little early, so by selling the calls as we've run up, I can get long the spoofs and make some money while I'm being wrong. Right.
And so that's one of the ways that I'll look at markets a lot of times that way. I don't need to be perfect.
Sure, and you mentioned patience, as a critical component. So let me ask, and I apologize for the background noise. My puppy is bored and chewing on things. Patience, so that kind of, I want to get your input, your insight. Is it because of lack of patience that people are drawn towards these smaller charts where they're having to trade, over and over and over again? Because
I think they're drawn to the smaller charts for two reasons. Yes, patience, and the problem is it's like a casino. I mean, if this thing's open all day, I got to be doing something. It's also the Puritan thought process.
Right.
In this country, if I'm not doing something, I'm not doing anything. I'm not succeeding.
Well, see, I place
with trading, it actually is the opposite. You can be here, but not doing something is more important than doing something.
Absolutely. And I only place maybe 2 trades a day for each product. That would be like a busy day for me.
Exactly. Well, I can tell you today specifically, I did 2 trades. I got short oil off the open, got about $1.50 out of it, and then I didn't get long, although there was a long trade there later in the day. I also got long beans and made a 3 or 4 cents. Not a big deal. It wasn't but that was my day today, and that's not a busy day. It's not a slow day.
Right. But it's I think a lot of people have a lot of difficulty setting on their hands It's very difficult. You have to wait for the market to come to you. Like if you're a profile trader, you got to wait. You have an area in mind, and you can't just jump in the middle of nowhere on that trade.
One of the things I like to do, Mike, still to this day, I will take the grains, segment them. I will take the oil and gas, and I will take the financials. And for me, trade one. I don't care if it's the SPOOs, the Russell, or the Dow, or the NASDAQ. Just pick one. They're all the same. So, I tend to prefer the most liquid markets, so I stick with the SPOOs. But what I will do every Friday, Saturday, or Sunday after the market's closed for the week is I'll go back and mark those different charts that I talked about from a monthly all the way down to a 1-minute chart,
right?
And find out where those the value areas are for me for the next week,
right?
And that way, my game plan is set. I know exactly where I'm interested in playing in the beans. I know exactly where I'm interested, and then I have a master spreadsheet, and I'm waiting for prices, as you said, just as you do, to come to me. Yep.
So let's talk about funding. One of your bullet points was proper funding. So a lot of people say that you trade with rent money. There's a lot of people that lose their jobs, and then they're home in front of the computer all day, and they think, you know what? I'm an above average intelligent person. I should be able to make trading work for me.
Don't do it.
Yeah, they end up trying to pay their bills from money that they earn in trading. And I think that just basically eliminates any chance of success because trading is hard enough, right? And then you got all this extra burden that you've piled onto yourself in order to do this, and it doesn't work. And to me, I think that a lot of people make money on sim very easily because they've removed the psychological part of the trade, right? And then when they go
eat this way,
then they go cash and they try to do the same thing, but they can't because psychologically they're not willing to make the same decisions or the same trades that they were making before whenever there wasn't money on the line. So I want to ask, and this also kind of goes into setting proper expectations. So what do you think? I'm going to just open it up. If you're relatively new at trading, should you start with swing trading stocks? Should you start with futures? How much money should you fund an account with? And what's a realistic return? What is a proper expectation to set for not just money, but length of time? How much am I really looking at? How long is it going to take me?
So there's a number of questions there that I always try to answer without being flippant or sarcastic. But really, Mike, how much do you want to lose? That would be the amount I would say to start with, because most likely you're going to lose that. And then from there, if you don't want to lose it, then you better expect not to get paid from it. I mean, that's why I started by saying. I mean, if you can get your P&L after a year of actively trading, and active again could be one trade a day or one trade a week, to be flat, you've done well.
Right.
In my opinion.
Right.
Now, if you've made it through that learning period, let's just put a year on it, and you want to go to the next level, and you have a number, whatever your number is, 25,000, 100,000, 500,000. I would just say I am willing to risk. This is a trading account. This isn't my only income. This isn't the way I'm going to make my money. I would still set myself up that I wouldn't risk on any 1 week, say 4% of my trading account, because it's just a trading account. It's not my last, $100,000. If that's my $100,000 trading account, and just pick that number, whether it's 2% or 5%. And if you hit that number in a week, you shut down. And if you have a maximum number, say of 20% in a month, you shut down again for the rest of the month, maybe the quarter, regroup.
Right.
You have to set rules, I think, when you get into something like that, that will put you in a position that, will treat you well. And again, I think you have to manage the risk, Mike, as you know,
right.
Versus, hey, this is what I want to do. Hey, there's no problem with dreaming, but you really need to understand multiple market conditions and figure out what works. Again, for your, when you ask me what would I trade, if I had to do it all over again, and I always tell people, I mean, I kind of went through stocks and options first, and I was successful at it. But if I had to do it all over again, I really wouldn't concern myself with them for multiple reasons. I mean, futures are more liquid, they're more transparent. My tax advantages, just simple, same thing you do. I get a 1099 from my brokers every year, and that's what I turn in.
Yeah,
I don't have to do it. It's a lot easier. I don't have to report every trade, even though I may do more trades.
Right. But there's leverage. You got to, I mean.
There's risk and margin there, though. There's risk and leverage. You're absolutely right. So I say that very, with trepidation, that you need to be careful. But that's what, if you're going to pigeonhole me to ask, that's what I would do. And it really doesn't matter what you trade.
Right.
Yeah.
But especially nowadays.
What I say about.
I mean, with $500 margins and all this crazy stuff, people can really get themselves in a lot of trouble real quick.
I mean, you shouldn't. I don't even think you should even trade unless you have $25,000 in an account minimum, and that's, to me, that's low end. And it's hard for people to swallow. But what you need to do is go out and earn the money, save it, then open up the trading account.
Right.
Don't do it. Don't open up a credit card account just to get that number either, because you're going to lose it if you do it that way, because hasn't been earned, it hasn't been saved. So you have to respect the margin and the dollar always, and you have to give yourself a chance. And again, but if you've made it through, so to come back to your question, if you've made it through that learning curve, some people may shorten that from a year to 3 months, or they may extend it a year to a year and a half or 2 years. Don't swallow your pride and keep at it. If you love it, you'll continue to do the homework and do the work.
Right.
But let's say you have 100,000. I think pretty consistently you could do 2 to 4 trades a month with $100,000 account. You're probably not going to trade any bigger than a 10 lot, and most of the time you're going to be 2 to 5 lots. I mean, you could make 4% a month pretty consistently.
And don't you think that time, surviving, isn't that the real key? Because I can remember so many times that I felt like I had really, cracked the code of trading, right? And and then all of a sudden I would do it again and again and again. And it's all about surviving, because you just keep learning. Yeah. And if you blow up your account, in the first 2 months, then you're going to be in a real bad spot in order to survive, because you need to be in this game a long time so that you can really see.
So even if you're testing the waters with futures and $10,000, again, both below my what I would say you want to do, put your stop loss at a hard 20% is $2,000 in that situation. And when you hit, you're done. Take a break. Regroup. See what happened.
Right.
Study it.
Right.
Figure out why you failed. Because whether it's $10,000 or $1 million, you better have that hard stop in there. For you to check yourself. Because if you don't, because you have bigger money, it just means you're losing bigger money.
Exactly. So
I think it's key.
In your presentation, you talked about finding an outlet outside of trading, and I totally agree with this. So I kind of look at trading to where if it's exciting, if you're having a lot of excitement in trading, you're probably losing money. Because otherwise it's really pretty boring. It's a lot of waiting. It's a lot of doing nothing and just patiently waiting. And I think that a lot of people are they're confusing, excitement for. Okay, whoa! I don't know what that was.
I didn't hear it. Yeah.
I think that you should find an outlet. Some sports. Go to the gun range. I don't know what it is, but find excitement somewhere else.
Yeah, right? Go hit a heavy bag punching. Go run. Whatever your thing is. Absolutely, you gotta have hobbies that drive that competitiveness, because you're not going to get it all the time. You're absolutely right. I say this all the time. If I am successful, trading is boring. I've picked my spots. I've executed where I thought I'd like to take a trade, and I've exited where I thought I should execute after. That's it. I mean, it is a boring business. It really is. Most people can't do it because, one thing I was going to touch on this earlier. You said, just because I'm smart, I've seen doctors, engineers, who are very linear thinking. If then, that will happen. Trading is trading is the opposite. Trading is almost like if you're one of those people, I will tell you, forget it.
You're gonna have a hard
straight
time.
up. Yeah. You're going to have a hard time because it's so perverse. It is the opposite of the way you've learned your entire life. If you study more, I'm going to make it. No, it's actually it's nothing but a psychological game. So to me, it's always the question. To me is, where can the most people get hurt in this market right now? That is the question. Forget your fundamentals, forget your technicals, and that's what market profile, as helps to provide. Is where are those pain points in this market? And I want to know where those pain points are, because I'm going to cause pain when
right.
Hopefully.
Yeah, and what you said is actually, I had it written down as one of my bullets here, but I find, and I've read this before and I agree with it, that, if you're like a big C-level executive and you decide to enter the world of trading, you're going to have a very difficult time. And it's because, people like that, and I'm speaking from experience here, I had a hard time in the beginning, it's because you're not used to being wrong, and it's very difficult for someone in a powerful position in the normal corporate world to transition into trading because they're very used to getting their way. And that's exactly the wrong thing you want to do in trading, right?
Like I said, it's a humbling business. And the other thing, I would say is, like you've got a group of people that are like-minded and that you can talk to. And really, there's no shame in being wrong.
Right.
And we're all going to be wrong over and over again, and especially, in life and in this business. But how do you deal with that, as you said, is really going to be paramount to whether you succeed or not.
Right.
It's
all risk.
It's also hard. Exactly. It is all risk. I don't talk about upside ever. That's always a question. How much money can I make?
I know. I'm right there with you, man, because for all the posts and threads and spreadsheets that I've seen that people put together of how they're going to go from trading one lot to 100 lots, if people would just spend that energy on the risk side and just trying to focus on not blowing their account, everything else will just happen on its own gradually over time. And I know it's not exciting, but that's what you've got to focus on. That's the only thing that you can control is how much you risk.
It's absolutely correct, and that's why I said you have to sit down with yourself and look in the mirror and say, okay, how will I feel when I'm down 5%, from my number, or 10 or 20?
Yeah.
And if you're fine, go to that number wherever that is comfortable for you. Some people it may be higher, but I would suggest, as a general rule, 20. It should be no more than 20 ever in a month, and just shut it down. Because it's rare. You'll be more selective in taking your opportunities, and you'll really, you don't. The only problem I would say is undertrading is as detrimental as overtrading. So that's where you have to have your plan, and following your plan in execution. You could see the markets very well, but maybe never act on them.
Well,
that's lack of execution, and that's a problem also. That's a whole other
If you can't pull the trigger, I find that it's usually because you don't trust your homework. You haven't really done it, so you don't have any faith or confidence in your method. Maybe you're trading way too big and you're not really comfortable with it. There's a lot of underlying reasons. So Let me jump to some questions here from the guys. So David wants to know: are you primarily using TPO charts, or are you using volume profile?
I use both. Depends. I've used both, TPO primarily, but I use volume profile also. Longer term charts, especially on weekly, monthly, daily.
Robert wants to know: do you have any books that you would recommend?
I would read Dalton's books. I think they're, to me, probably the best market profile TPO type books. Jim Dalton.
Right. They're a little difficult to read. I can't remember. There's a thread on the There's a thread on the forum. Yeah, there's a thread on the forum for volume profile, and there's a guy that a book I recently read, and I can't remember his name. I can't remember right now, but it was I thought a very, very good introduction to profile book. If someone maybe can look that up for me and put it in the room.
Yeah, I'd be interested also. Absolutely.
Okay, so you mentioned that you trade in the ES and oil and some of the grains and stuff. So do you trade stocks at all anymore? Do you swing trade any stocks?
Very rarely, and it's usually big dollar price stocks, Priceline, Apple, CMG, those types of things.
Right.
And I'll usually put on when a longer term chart goes gets to the profile I like, I'll take an option position around.
Right.
Yep.
Jeff just reminded me, it's Dr. Kepler. Jeff, what was the title of the book? Could you look that up for me, please? Okay, so Matt, are you doing like simple directional trades in each market? Are you doing any kind of hedges? What are you doing?
Yeah, again, a lot of times, if I'm swing trading the SPOOs, and I think 1400 is an area that we're probably going to hold here for a while, I might sell some puts and then, play long side only trades on the SPOOs versus if I'm hedging. That would be a way I would do that. And I'd pick my spots. Again, I wouldn't necessarily just be hedged to be hedged. I'd wait for pullbacks to buy, and I'd wait for breakouts to buy when I was betting that or if I were short puts, I'd be doing the opposite. So I'd be selling SPOOs, and but typically directionally, and again I'll use daily, 1 week, 2 week, 1 month, 2 month, 3 month, 4 month. That's the way I'll look at my charts.
Okay.
So each that's when I said I keep a matrix, I'll go through every time frame and say, are we bullish, bearish, non-trending, bracketing? I want to know where the brackets are, where the value areas are, and go no-go areas, and that's where I want to play around. Is really those turning points. I'm a surfer. I mean, I look for change of direction is where I make most of my money, and that's where most traders make their money. It's really the Tudor Jones style. It's really
right.
Buzzy Schwartz. I like to fade moves, whether we're moving up or moving down. That's where I'm. It's not the most comfortable for most people, but that's where I like to make my money.
Who, out of all the people that you've interviewed, do you have like a favorite interview that you think was the best one?
Favorite one. It's tough. I always like I said, I like Michael Martin, Martin Chronicles. I like talking to Denise,
right.
Scholl. I like, like another book that I always say that I like that has nothing to do with TBO. I love Pitbull by Schwartz. That's probably my favorite book.
Right.
All-time trading.
I love that book. Yeah.
Yeah, and it has you won't learn anything except about yourself. I think
exactly.
So those are the interviews, Mike, that I like best. Are when we can get into kind of that shadow work that we all have. We all have our problems and our crap that we bring into this business, and that's the piece that I enjoy learning more about.
Right.
The more I can learn about that, the better trader I become. So those are the interviews I really enjoy.
Chris has reminded me. So the book that I was talking about is John Kepler, Profit with Market Profile. And guys, don't buy it on Amazon because I don't know what's going on with their prices. I only paid like $30 or $40, and it's like 100 and something on Amazon. So search around for it. It's a really good introductory book that'll teach you all about profile. Then I think you go to the Dalton books, which are much more in depth.
Yeah, I will definitely always say about Dalton, you got to read him a few times.
Yeah.
Even now, I go back and go, oh yeah, that's what he meant by that. It's pretty heavy stuff at times. Absolutely.
So Derek has a question. He says that he's got to the part where he can survive now with trading for the last few months. He's pretty much only losing commissions. And do you have any advice on how to get over that final hurdle?
Well, this is a difficult two-way question, but I would always put it Socratically. Why is he successful now? Is he trading or is he not trading? Ask him why. What is he doing?
Right. What's changed? Right. Simon says that unfortunately he just blew half of his account trading energy spreads, and now he's having a really hard time pulling the trigger. Any advice for him?
Was he always trading energy spreads, or did he style drift?
Right. That's a good point. And I see this all the time on the forum where, after somebody has a bad day or a bad week, then all of a sudden, the next time they post in the forum, they've got all new charts, all new indicators.
Yeah, just because you lose doesn't mean your strategy is incorrect. Absolutely.
Exactly. Right.
Yeah.
Exactly.
Yeah, I mean, you got to give it some time, and that's why I said, trade the percentages a day that you'll lose. You got to do that 10 times in a row before you're going to get. If it's 2% is your max drawdown in a day, you got to do that 10 days in a row before you're going to hit your max drawdown of 20%. If those are your numbers, so just one trading day should never blow you up, and one trading day should never make your career either.
Right.
Unless you're one of these amaranth guys who were doing it because they knew they were going to blow up or make it big. And that's not. Most of us don't have that unlimited capital. So.
And if you do have a bad day, you have to really ask yourself: was it because your methodology, or was it because of your execution? And if it's your execution, then don't go change your charts.
I would say this, Mike. That probably once a month there is a day. I just expect it every 20 days of trading that I execute flawlessly and I lose.
Right, and there's nothing wrong with that.
And I look at it and I look at that day as a success because I took the trades that I wanted,
right?
And I would take them the next day the exact same way, I know that day is not going to happen 20 days. So those are the anomaly days. So your trading strategy should basically get to that point where when you're wrong, you know it's inevitable.
Right.
But you executed flawlessly. You took your stops. You did what you were supposed to do, and that's just the day. Tomorrow's another one, and the trades will be.
I agree completely. And you know what? If you can do good on those days, the days where you did everything right but you still lost, then you got everything under control. Because the real concern is the flip side, where if you make a bunch of mistakes and you somehow still end up making money, then that's a dangerous game. It's going to lead you down a really
double down, revenge trade, and it finally works. Yeah.
Right. Now you've got all kinds of new bad habits.
Yeah, the martingale system never works because we don't have unlimited capital. Most traders just don't have that, free range leverage book.
Right. So let me ask you, what are you using for charting? What platform do you use?
So I trade off of Ninja through 3 or 4 brokers. So I use the Ninja platform, clear through 3 or 4 brokers, and I use an add-on program that I think it's fin-l.com.
Right.
That does my profile. So it's a one-time fee. That's what I use, and I add that onto Ninja. So I like the way Ninja charts up here look. It's just visual for me.
Right.
I've used them for a decade easily. So fine. Again, I don't care what you use. It's a personal preference. As long as you can get the information looking the way you need to get it looking.
Well, you're in good company. Most everybody on the forum is using Ninja.
Yeah.
Okay, here's a question from Luis. He wants to know, do you invest, or what do you use to invest the money that you earn on trading? What's the actual proportion in your portfolio? Like, how does it break down between stocks, bonds, T-bills, cash?
Well, I mean, we're talking portfolio management versus trading. So trading is its own piece of the portfolio, and I always tell people that. I'm pretty comfortable. I'm a better earner than buying the S&P 500, in my opinion. So I'll have more of my capital, my alpha capital, tied up into trading at any one time than anything else. That being said, I think there's a place for bonds. I think there's a place for real estate, metals, and I think everybody's situation and timing are all crucial to their life moments and where you are. There's no one answer.
Right.
You have to do what I think I always say to people. You have to do what helps you sleep at night. And if you can earn 6 to 8% a year in the majority of your capital, you're beating the world, and that's all you need to do. And I don't believe in let's say 80% of your capital needs to be in that area. It's just that's where you've got to be. Can you hear me okay?
Yeah, sorry. I'm just scanning through some questions. Yeah. All right, guys. So if anybody has any other questions, go ahead and type them down.
So I think the answer is, again, the bulk of most people's capital should be growing conservatively, but expecting growth. You need to somehow manage the risk associated with earning 4 to 8% a year.
And let me.
However you do that is up to you. But
So let me ask you a couple questions about current events. And before I do that, okay, I want to clear up a few things. So I see a lot of questions over and over. SPOOs, guys, SPOOs or the S&P 500. TPO is time price opportunity. Okay, that's a market profile term. Time price opportunity. And the website that he mentioned is FinAlg. It's fin-alg.com. All right. Let me ask you about QE3 or QE Infinity. What do you think the success is going to be? Are you bullish the S&P? Are you bullish mortgage-backed securities? What are you thinking?
So loaded question. I detest intervention. However, I think it's going to continue to go on. That being said, I want to day trade S&P futures more than I want to swing trade because of the fact that there is intervention out there all the time, right now, and you can't fight it. But it makes it very difficult to be long or short, and for very long periods of time. And I want to focus more on real stuff, which is again grains and oil, because although they have their own intervention, whether it's USDA reports on the grain side or livestock, livestock, excuse me, and then the oil reports we have every week and every quarter. So they all have their own pieces of intervention, but I would say that the S&P is new to this over-intervention, and the real stuff is going to be easier for traders to manage versus the financials. That's just my opinion. And as far as bias, QE continues until we blow up, and I have no idea when we'll blow up, and nobody does. So
yeah,
I just can't. I'm out of the prediction business. I mean, it's just too hard. I mean, it's just. Matter of fact, I got out of my, I closed my short biased hedge fund in 06, 08, and 9 would have been the big years, but I couldn't, I could not have maintained for those last couple of years waiting for it. Although I was making, 8 to 12% a year, the big money came, 3 years later. So it's a tough game, And
well, I think personally, I think there's always a lot more money on the long side. And I know that some people feel like, the short side has the potential, or maybe, what's the word I'm looking for? It's more volatile, happens faster. But I think that, the way the world is run, there's always going to be more opportunity on the long side. And yes, there's going to be some type of a doomsday event at some point, because you can't just do all this stuff and get away with it forever. But for now, it's not going to be tomorrow, most likely. So for now, I favor the longs. And I take money out to the market, and then I just try to do something very safe and very diversified with that money that would be able to survive, whatever's coming on the main market.
Yeah, and all it takes is 10% to survive. So, you're right. I mean, I don't disagree with that mentality. And again, that's for longer term. We're talking. We just shifted from trading to investing. They're very different. Sometimes to me, cash is an investment, regardless of bad financial managers who will tell you that you have to be invested in something all the time. I disagree. Cash is an opportunity, especially if you're not comfortable playing downsides and things like that. So,
speaking of that, let me ask you, what's your opinion on gold? Where do you think it's going to go? I mean, this is just for fun. I'm not.
Again, until it goes to a new high, I think I'm bearish on gold right now. And I think this last rally was the third rally up into the 1800 range that I think is just a great sell. It was a great sell opportunity. So.
Okay.
That's my opinion. I have no position in it, but I'm looking at the chart and just I was looking at it this morning, going, just another QE run up to a high that failed again. So gold is telling you that QE is failing if you believe in QE. Right. So there's a divergence there. So to me, that's a warning sign. And what do you believe? Do you believe the physical gold, or do you believe the Fed? And right now, the market's always right, and that's a warning sign. That's a warning sign to me. And the other thing that I've been thinking, short term being the next month. The election is but 3 weeks away from tomorrow. Right. I think it's been over for 2 months. Obama's going to win, regardless of your politics. I'm not voting for either. It doesn't matter to me. I think that the market. I thought that the market would see between 2 weeks ago and the election probably a pullback to 1395 to 1365. Right. So we haven't gotten there, and we have 3 weeks left. I don't. Again, that would be probably a buying opportunity if we got to those levels. Right. To your point on the always look bullish, that's where I'd probably look to buy if we got to that area. Sure.
Okay, guys, let me scan any last questions. If you have a real good question that I skipped, go ahead and type it again. Let me see here. Vance wants to know, what do you like most about the grains?
What do I like most? Both. Best. Short hours.
Okay. Do you ever get caught on the limit ups and limit downs? Does that ever cause a problem for you?
No, I'm usually the right side when that happens.
I've always avoided them because
because of the fact that I'm a fader. I'm not going to sell something until it's gone, kind of limit up. I mean, I wait for the news that just like I don't want to trade if there's a USDA report coming out tomorrow. Sure. I won't have a position. And then after that, I know where the new value areas are. So. Droughts don't happen overnight, and floods happen, and they don't. They also build over time. They're not like real quick. So fundamental things like that I don't understand and can't see coming. I usually can get out of the way, and my stop will get me out before that happens. The market always knows before that stuff's even happening anyway. So
right.
I don't worry about it. It's inherent. I mean, you have the same risk in the SPOOs. We could be living up 5 or down 5. Right?
Sure.
So,
or have a flash crash or whatever.
Right.
Futures operator wants to know, he says, can you clarify your top-down multi-time frame analysis versus overcomplicating it with too many time frames?
Well, so that's a good and fair question. The answer would be, if you have a larger portfolio of cash to play with, you should have multiple futures accounts, and maybe one that trades on a weekly chart, 240-minute chart, and a 30-minute chart. And the reason why I say top-down is because I do have multiple accounts where I may be long the weekly, short the daily, and short the 240, if that makes sense. And they're 3 separate trades and not related to each other. And the problem I think people get, Mike, is they look at the weekly and they see we're in an uptrend, yet they're trading like we're in an uptrend, yet for the last 3 months we're in a downtrend. So if your time frame is 0 to 3 months, you're going to be in this trade. You shouldn't be looking at anything but for context at the weekly chart, if that makes sense. But you need to know the big picture is still bullish. But right now, today, the shorts are in control of wheat, corn, and beans, period, on the shorter-term traders' markets. So where you play then depends on, where your risk is.
Right.
Does that make sense?
I think it does. I think that, well, let me ask a separate question, though. Let's say that you're a beginner or you're losing money. I think that, let me ask you, should you be day trading or should you be swing trading?
Trade smaller and wider, meaning,
less risk but bigger time frame, right?
Yeah, I mean, use a 30 to 60-minute chart and pick your spots. You don't have to be absolutely correct, but knowing that, hey, if my risk is $1,000, I can buy one lot of beans and know that it can go 20 cents against me, which is a pretty big move.
Right.
Something like that. And, $1,000 on a $25,000 account, again, that's going to happen 4 times before I get blown out. And I'm not going to trade more than 4 to 8 times a month on a middle range chart like that.
So if you're a guy out there that's having a hard time, then you might seriously consider bumping your time frame up. And it doesn't mean, if you're trading a 1 minute chart and you go to a 60-minute chart, this does not mean that you need to have 60 times the risk. You can.
It's the opposite. Matter of fact,
right.
I mean, if you take that trade, you're going to do. Let's just say you do 6 trades a month like that, and 5 of them are winners, and you make 1,000 per. You netted $4 grand on your 25 grand. I mean, that's, to me, I don't know what else you're looking for. That's a realistic expectation with that type of trading.
Right.
And again, whether it's beans, wheat, corn, or the SPOOs, you can do it, but you just have to really learn, study, know those value areas, and play it on those broader charts. So
time frames up and position size down until you get consistent, and then
absolutely
increase the size.
Yeah, then you can shrink it. I mean, then you can play smaller time frames intraday with bigger size. I mean, it's again perverse, but you want to play bigger size when you're only in the trade for the day, because your losses are bam, they're quick, you're done.
Right. Okay.
Today, again, if you're looking at an hourly chart, all last week you wanted to be selling those beans up to 1570. You got there like 3 times, and the profile told you just sell every rally because we had already gone to 1500, and until we get over 1580, we're not going higher. So we just bounced 70 cents or almost 5%. Of course, we're not going to, markets don't go straight up and they don't go straight down. So find these areas of contention and play it.
Right.
I mean, it's not rocket science.
Yep.
People like to overthink it sometimes.
Yep, I agree completely. Well, Matt, I thought this was a really terrific webinar. I see a lot of questions about profile, so maybe, just maybe, I'll be able to twist your arm and come back and talk to us about profile.
Happy to. Again, there is no holy grail, and I always start or end with this, but this, there's no holy grail, there's no perfect pitch. It's managing the risk. So whether it's, I still view a few technicals. I look at divergences more than anything. Fundamentals, like I said, I care less and less about. Probably 1% of my time is spent even thinking about droughts and QE. I don't care anymore. And most of my time is spent looking at profile, because it tells me if you really want to trade without ego and trade in the now. And that's really what trading is all about. Where are we right now? Profile is the best way for somebody to learn about where the market is now without guesswork. Again, takes the elimination out of it. I can tell you very quickly, are we trending up, down, or are we sideways? From there, where do I place my bets? That's it. I mean, it's not. It shouldn't be any more difficult than that. And thank you. I'd be happy to come on. And when I have, like I said, I'll have a trader a month come out and trade with me at my office. And the guys and gals that have come out here, that's exactly what they say. It's like, I see, your perspective is so much clearer because you've taken away all the noise and all the clouds that were out there for me before. I mean, that's the consistent thing, and that's all you want to see. And just because you're going to see it one way and I'm going to see it another way, but we're both going to behave the way that we need to based on what we see. And that's all you can do.
So, Matt, can you throw up your contact slide again? And I'm going to invite anyone that has any other questions or that wants to reach you to send you an email or hit you up on the website.
Sure.
All right, cool. There it is.
So, yeah, I'm MissTrade at Gmail, and you can find me at MissTrade on Twitter, MISSTrade.
All right, Matt. So once again, I really appreciate your time. I thought it was a great presentation and a great Q&A. And I will talk to you offline about maybe doing a profile webinar sometime in the future. And
sure. Okay.
Yeah. So thanks very much, Matt. And I can't wait.
Mike, I appreciate it.
I can't wait for more interviews. Those interviews they're just full of insightful information. Every single one of them is worth watching. So I hope.
Well, thank you. I mean, I enjoy doing them, and I hope everybody gets one or two nuggets out of all of them. That's the whole idea. I just try to share that. So I appreciate it.
All right, thanks, guys. I'll post the recording of the webinar on BMT sometime tomorrow. I also will send it to Matt, and that way he can tweet the link out. All right, thanks, guys.
Thanks, Mike. Appreciate it.